HDFC Bank has recently corrected from a high of 1720 to a low of 1380. Polycab crashed from 5700 to 3800 levels very fast. And Indian Energy Exchange corrected from 170 to 130 levels in no time. But we need to understand why. Their revenues and profits did not crash. Only the stock prices crashed. In the next few minutes, I will give you 4 big and common reasons why stock prices go through huge corrections, and I will use multiple stock examples. And most importantly, I want to share with you how to interpret those reasons to avoid losses in the stock market. Let's begin. Namaste and welcome to Retail Investing. It doesn't matter how good the financials of a company are. The price of a stock at any point in time is decided by the buyers and the sellers. And these buyers and sellers are collectively called Mr. Market. Mr. Market has a certain wisdom to nail the valuation of a stock in the long term. But in the short term, Mr. Market has no wisdom at all. He is driven by excessive greed or excessive fear, or sometimes apathy. Something similar has happened with our first stock. It is India's biggest stock and one of the largest banks in the world, HDFC Bank. And here is the chart. You see these big gaps? These are rare events for any blue chip stock. And I'm talking about black swan kind of events. So the stock price crashed from 1720 to 1380, and that is quite below the 200-day moving average. The selling volumes were very high, and that indicates institutional selling. The current valuation is below the COVID crash valuation. Now some experts feel that the days of premium valuation for HDFC Bank are gone. Now before I explain whether that is true or not, I want to show you the real reasons why this correction happened. In short, the analysts were expecting better quarterly results. That's all. In the latest quarterly result, the bank's net interest margin has contracted and the growth of its new deposits has slowed down. Now these two things are not surprising at all. It is quite obvious that whenever a company undergoes expansion, the profit margins are going to suffer for a while. I remember making a video on HDFC Bank back in October 2023, and in that video I tried to predict the worst case scenario for HDFC Bank, and my prediction was that the stock might keep underperforming for the next 3 to 4 years. Why did I say that? Well, at that time I did not have any calculation or data to show you, which I now have, and I'm going to show you in a moment, but my estimate was that it would take at least 4 years to find conclusive evidence in the financial statements that the merger has worked. And it's not like that as of now we have evidence that the merger is failing. No. What I'm trying to say is that the market likes absolute certainty in a business to value the stock. If there is anything in a business which the market finds difficult to predict, the stock suffers in the short run. That is exactly what is happening with HDFC Bank. Right now the market simply cannot value it with certainty. So here is some data / estimates from the management of HDFC Bank. The management thinks that it would take another 4 to 5 years for the merger to be digested. Pre-merger, the return on equity was more than 17%, which by the way is very impressive for any bank. But post-merger, the return on equity has fallen to 15.8%. The management expects consolidation for the next 4 to 5 years. And after this 4 to 5 year period, the return on equity will get back to the pre-merger levels. So we retail investors should also be prepared for consolidation in the stock for the next 4 to 5 years. And there is another reason for that. You see, the prices of blue chip stocks depend a lot on the buying and selling decisions of the fund managers. And right now, the fund managers are completely in love with PSU stocks. And they have valid reasons for that.
शेयर मार्केट में रुचि रखने वाले को भी ये गुरु मंत्र है कि जो सरकारी कंपनियों को ये लोग गाली देना, आप उसमें दांव लगा दीजिए साहब, अच्छा ही हो जाएगा.
If this man is saying that the PSU stocks are going to go up, they are going to go up. And the fund managers will remain in love with the PSU stocks for the next 3 to 4 years. HDFC Bank will keep getting more and more undervalued. This scenario has a very high probability, but there is a twist. And it is the LIC twist. So the Life Insurance Corporation is going to own 10% of HDFC Bank. If somebody acquires 10% of a publicly listed company, the stock price could easily skyrocket. But LIC already owns 5% of HDFC Bank. They are going to buy only 5% in the next 12 months. And that should support the stock price of HDFC Bank in the next 12 months. You see, the government sometimes like to use LIC as a holding company to buy stakes in other companies. And if LIC is acquiring stake in HDFC, this could mean that the government believes in HDFC Bank. 4 years in the future, HDFC Bank can get re-rated with premium valuation once again. The company has a good leadership and a clear vision for the future. The long-term growth prospects are definitely intact. So you can do whatever suits your investing goals, but do not make a decision based on the mood swings of Mr. Market. We see a news article with a sensational headline and we immediately reach a conclusion without even reading the article. Something similar has happened with two stocks recently, Indian Energy Exchange and Polycab. Let's talk about Polycab first. So here is the chart and this is the massive fall. The stock corrected from 5700 to 3700 rupees very fast. It is still available below the 200-day moving average. If you look at the volumes, you will notice that there is a sudden increase in volumes. This indicates heavy trading activity. You see, traders are always ready to do news-based trading, but investors should not lose money in these situations. So let's understand the news regarding Polycab which led to this fall. So this is an article from Money Control. The headline says the Income Tax Department has found 1000 crores of unaccounted sales. Now this is not a clickbait article. The headline is good and the reporting is also good, but it is also very scary for Polycab investors. So investors need to read the body of the article and do some analysis of their own. So it says there were unaccounted cash sales of 1000 crore rupees which were not entered in the accounts. I would be more worried if the opposite happened. Suppose the company showed sales of 1000 crores in their accounts, but those sales actually did not happen. Now that's called accounting fraud. The financial statements are officially published by the company, and we can blame the management if the profit and loss figures are inflated. But when the sales happen in real and not entered in the accounts, it could mean that someone is stealing money from the company. The article further says that some distributor of the company made cash payments of more than 400 crore rupees for procuring raw materials. And this guy also used other parties to tamper with the purchase accounts. Now this makes it quite clear that this distributor was stealing from Polycab, and it does not look like the management had any role in it. Polycab can be expected to perform well in the near future. Firstly, because copper prices are stable, and secondly, housing demand is rising. A lot of cables and wires are required in new houses, so there should be a lot of sales. The second case of a news-based stock crash is Indian Energy Exchange. So here is the chart. The stock price was above 170 and in no time it crashed to 130. Why did that happen? Because of this news called market coupling. So there are three power exchanges as of now: Indian Energy Exchange, Power Exchange India Limited and Hindustan Power Exchange Limited. So these power exchanges are also independent markets, which means they receive their buy and sell orders for electricity separately. It is just like the National Stock Exchange and the Bombay Stock Exchange receive buy and sell orders for the same stock separately, and due to this there is a very small price difference. So the government wants to eliminate this price difference by introducing market coupling. If market coupling gets implemented, all orders for electricity from the entire nation will be received on a single platform, and there will be literally zero price difference. Is it going to destroy IEX's business? Absolutely not. So what is happening with IEX is that big traders are repeatedly using this market coupling news to move the stock price. Sometimes we see news of market coupling fears are gone and the stock price jumps up, and then we again see that market coupling is back and the stock crashes. This is why I do not care about market coupling. So IEX is a business with very high return on capital, and that's what matters to me. The thing to focus on is how they can scale. It is still a very small company with a market cap of only 12,000 crore rupees. So please remember that news headlines can damage your portfolio if you misinterpret the news reportings. In any company, the management's job is to create wealth for the shareholders. But whenever they forget that and focus on promotion and publicity, almost every time it is a disaster for the investors. One very good example is a company by the name of Ikigai Energy. So this company's MD was very busy with publicity in 2021 and the stock price went up almost 80 times. What followed in the next year is a lesson for all retail investors. The stock price crashed from 3,100 to 400 levels. Multiple auditors resigned after accusing Ikigai Energy of accounting fraud. The company was forced to bring down their return on capital employed to 31%, which they were previously showing at 236%. All their institutional shareholders have left, and retail investors lost their hard-earned money. So publicity and promotion is a big red flag for me. The perfect example in this category would be Rajesh Exports. So here is the chart. The stock has crashed from 1100 to levels of 350. But this company is no joke. They are the world's largest gold company and they are also the world's largest gold refiner with 35% market share. And LIC owns 11% of the company. So what is wrong with Rajesh Exports? If you look at the sales figures, they are huge. But the profits are tiny. No value addition is happening. It looks like the price of gold is getting reflected in the sales numbers. That's all. Back in 2023, when the stock corrected to 550 levels, everyone was telling me that it is an undervalued stock, but it is still not undervalued at 350 rupees. The price to earnings growth ratio is still very high. You see, value in a business comes from the future cash flows, and this company's future cash flows are doubtful. So any analysis that says Rajesh Exports is undervalued is definitely faulty, and retail investors need to avoid faulty analysis. Rajesh Exports is a polarizing stock. Whenever I say negative things about it, which are factual by the way, some people get offended. So let me share one positive thing about the company. The promoters have increased their stake recently, which means they are bullish. So if you think Rajesh Exports is going to recover soon, please let me know in the comment section. Jai Hind.